All right, back to Notion. Yeah, like I said, you can journal using any like anywhere where you can journal, where you can write anything about your trading. It can be a notebook, it can be a notepad, it can be spreadsheet, it can be word processor, it can be Microsoft Access, it can be PowerPoint, it can be. But I usually prefer Notion. Notion and Excel. That is Microsoft Excel. I believe each and every one of you knows the Microsoft Excel, the spreadsheet, of course, and you all know also to use all of that. But if you find it hard, you can use a notepad, you can use a notebook, but I will prefer Notion, and I will send you links on the videos that yeah, from another channel, of course. I'll be sharing them on the group so that if anyone who wants to use Notion can actually learn from those videos. I believe they'll give them the go start to know how they can create their own trading workspace or their own trading vault or whatever the name you'll give it. So you can clearly see this is a duplicate of my vault. I have named it Luap's Trading Vault. You can name it Trading Workspace. You can name it Trading Studio. You can name it any of your choice. And of course, you'll replace this one here with your name. So then after that, the cover, the whatever, that's upon your taste, upon your choice, upon your, I mean, yeah, your taste, the cover, the icon, and all of that. Then obviously the comment, you can place it or not. A restricted trader is a profitable trader. That's always, and we all know that. All right, the most important thing was to cover is the risk management and the strategy psychology. I'll be covering them just by using this template that I'm actually showcasing right here, this Notion workspace. Right, so the trading assets, right here, you can be trading multiple assets or you can be trading less assets. It actually depends with your trading style, your time frames, your entry time frame, and all of that. So let's say we are using GBP/USD and USD/JPY. Of course, these are the most pairs, like the best pairs for me. Like I love GBP/USD and USD/JPY. They have been working great for me. I usually love these two pairs. Then let's say now those are the assets. Of course, in a trading studio or in a trading workspace or whatever the name will be calling that area, you'll of course include the trading assets. But if you're trading multiple assets, this means that you're trading more than 10 pairs. I don't see any reason of you out. Let's say you don't have specific assets that you usually monitor. Let's say you monitor any asset that is aligning with true SFC, the structure is correct, the POIs are clearly seen. When you see such an asset, you usually take the trend from there. Then this means that you are actually not considering a specific or predefined number of assets or specific assets. So there's no need to actually include it on your workspace. So if you actually have 2 to 3 pairs that you usually mainly monitor, then you have to include it on your trading workspace. Then the risk and money management plan. Of course, all of this that I'm sharing here is of course the trading plan that most of you guys have been asking for. The trading plan. This is, yeah, the trading plan. In fact, more of or more than a trading plan. So trading assets, that is GBP USD and USD the risk and money management plan. This is anything that you use that will protect your capital, and of course it will protect your psychology. The risk and money management plan protects not only your capital but also you. It protects you from getting messed up psychologically. So max trades a day too. I know your system, maybe if you're monitoring multiple pairs, maybe in a day you may find like more than 5 trades in a day. But I'm not expecting you to check like all of those 5 trades. So I'm only expecting you to filter out those 5 trades and ensure that you only like choose 1 or 2 out of those 5 that are high, like A plus, so that now you take the high probability ones. But for me, actually, I can go in a day with only 1 trade or 2 trades, but mostly 2 to 4 trades in a week. I mean, not in a day, in a week. I can go a full week with only 1 trade, 2 trades, but mostly maximum 4 days. I mean, four trades. So 2 to 4 trades for me actually. But in a month, like in a day, 2 trades, because like I don't know if tomorrow I'll be getting a setup or the next day after tomorrow I'll be getting a setup. So if the 2 trades present today, then they will cover up for the days of the week that maybe the setup may not present. By max 2 trades a day, I don't mean that it is a must that for that day I will need to take 2 trades. I mean that I will only be taking 2 trades. So meaning that if the market or whatever it presents more than 2, I will filter them out and pick the high probability ones and only take the 2 trades. This means that there are days that the market, or yeah, you can never like see any setup. Maybe you may see one setup, you may see none. So that also applies. Then the fixed percent, yeah, risk per trade. This is very important. I know most of you guys are using fixed lot size. If you're using a fixed lot size, I think this is the moment that you should stop using a fixed lot size, because if you're using a fixed lot size, this means that you cannot even, yeah, maybe you can guess, but it's something that I don't recommend, because if you get a trade, of course your trades will be having different SL pips, because if you say, like, if you caught a GBP USD trade and you use one lot, and you are like, the stop loss pips for that trade is like 20 or 30 or whatever, then tomorrow you get another trade and the stop loss pips, of course, I will like, the stop loss, they will be ranging, so it will be something more than that. So the money that you lose on the 20 pips while using the same fixed lot size that you use today, it will not be the same, they'll be ranging. And in that case, this means that you will, like, your psychology is already messed up, because you don't even know how much you'll be losing. Maybe you know, but let's say now your account increases, but you're still using the same fixed lot size. So, or your account reduces, but you're still using the same fixed lot size. So that's something that I think it's not adding up to me. You need to use a fixed percent risk per trade. So if 0.5%, even if even if your account increases to whatever number, if you're using a fixed percent, you will only be risking 0.5% of that amount. If your account reduces to whatever number it will reduce, you will still be using the 0.5%, like fixed 0.5%. So this means that it will take you like 200 trades before you blow the account. And also, you know exactly how much you will lose in that trade, because if you're using like let's say 100, if you're trading 100,000 of capital, this means that 0.5% of that is 500 bucks. So 500 bucks from that, like from that 100,000, it's not that big that it will mess up with your psychology. But if you're using a fixed lot size, and let's say that fixed lot size, it's let's say it will give you like 5% loss, or let's say it will give you a loss that is very small. This means that if you're using a fixed lot size, let's say fixed lot size is very small, that even if you win, it's not adding up much of that account and all of that. So just use a dynamic lot size based on your risk tolerance. For me, I usually use a 0.5% per trade. For you, maybe you can use 1%, but I usually prefer 0.5% because it's good psychological. Right, then the minimum risk to reward, for you it can be a 1:2, but for me I really like it 1:3. So that's good also. You can use a 1:2, it's not bad. A 1:2.5 as your minimum, meaning any trade that gives you a risk to reward less than 1:3, you should not take that trade. Like I said here, a restricted trader is a profitable trader. You should have restrictions to your trading if you want to be profitable, and also other to the rules, other to everything that is actually on your trading. Because if you just write these things but you don't follow them, then what's the need of you writing them? They're just there for like, just there without any implement. You need to rigorously follow them. Yeah. Then of course set and forget, and of course there's other rules, the psychological guidelines rules. Of course, always monitoring the economic calendar. When you wake up, before you get into the market, the first thing, check the economic calendar. Are the pairs that you are going to trade, like, is there any high impact news that will be presenting in maybe, let's say, hours, or just know the time where there is the high impact news. And also, when you get to see like the economic calendar, you can also see that let's say you're trading GBP USD, and you see that GBP USD and USD, they have like medium strength news. This means that the pair, they'll be moving like the pair will be moving actively and it will be creating big candles. So that means that the that's when now you'll be getting the big moves and stuff. Also, you know that the pair is also active, and yeah, just get to know that, because if you enter a trade and let's say there is some news right after you enter that trade, this means that there is a high possibility that that trade will get violated, let's say by the news, because the news are unpredictable. Price can just wick below all the way, taking your sell and then reversing back. You don't even know, even if most of the times the news follow the technical analysis, you don't know how that news will present. Sometimes price may just wick all the way below, taking your SL out, just wick on both sides, wick up, wick down, and close in the middle. A doji with big long wicks that may end up stopping you out. And also, you know that a loss resulting from a high impact news is not exactly the one that you intended. Let's say now you are using a fixed percent, a fixed risk percent per trade, let's say 0.5%, then you get stopped out with a high impact news. Due slippage, you may find that you may not get the 0.5% and find something bigger than that, nearly double that. You may find that you have even lost 1%, and it's due slippage. Because of slippage, you ended up like just wake up and see the what the high impact news, and ensure that you have noted that the pair that you're trading is not that affected with the high impact news. And once that happens, then now you can check the setups of it, and yeah, of course, trade normally, knowing that you don't have the pressure of you may enter into the trade and get stopped out along the way. So yeah, those are just the psychological. Some let's say you are in a group and someone drops a setup on the same pair that you trade, let's say GBPUSD, and that setup is against your analysis. Let's say I drop a setup, I drop a setup, and then you check that it's not aligning with your analysis. Maybe you can check where am I wrong, where I'm all of that. But if you clearly see that everything that you've analyzed is correct, and checking at mine, you can see like there is something wrong with mine, then I will prefer just to go with yours. Don't get swayed with other traders' opinion. Maybe the trader is better than you, but don't get swayed of the other traders' opinion. Just stick with your own analysis and all of that. So those are kind of rules. And also tweaking your stop losses after losing streak and all of that. Also, there is the daily loss limit, the weekly loss limit. All of those are things that you can include in your trading vault just to keep you well psychologically. Right, then of course there is the technical base. You need to include, I know you know the entry modules, you know how you'll be entering the trade, but it's good to ensure that you have restrictions also on the pro trend. You have restrictions also on the counter trend. Of course, I have never showcased the counter trend. I only showcase the pro trend. The counter trend needs a little bit of experience and all of that, but anyway, you'll get to know it, you'll get to see the patterns as you move on with your, as you keep on placing trades, you see that the counter trend, how it's, yeah. Then of course include the playbook. You can clearly see below is the pro trend playbook. If I open this, yeah, this is actually the one that I've been showcasing, the one that I've been teaching even on my YouTube channel. And yeah, you can clearly see the higher time frame, then the lower time frame. Of course, after the interaction of the higher time frame, then price, you can see that's the change of character and all of that. For me, I restricted myself from taking this first trade, and I usually take the trade that is after the second leg. You can see the process of buying starts with the retest in the second leg. You can see this is the first leg, this is the second leg. The two-leg protocol is must when confirming possible reversals. For me, I restricted myself to this, that I will only be taking buys after the second leg. Then set TP at external highs. Of course, I'm a day trader. I need my trades to close during the day. I don't hold trades overnight. I don't hold trades over the weekend. So this means that I'll be targeting the lower time frame external highs or somewhere above that, but ensure that I also get a good risk to reward. And I say that I don't take a trade with a risk to reward less than 1:3. So this means that I will still have to treat the trades in such a way that I may get a good risk to reward, and also get to target somewhere where price will achieve that without like need to hold during the day or over the weekend. I mean during the night or over the weekend. All right, so this is the pro trend. We all knew the time frames. I mean the higher time frame, the lower time frame, and all of that. We all know these, like yeah, everything. We also talked about the key area and liquidity levels, and this is the pro trend playbook. I also have my counter trend playbook. Yeah, of course, there is counter trend playbook, and this is my counter trend playbook. I know I have not talked about the counter trend, so if you can understand anything from this, of course, you'll check it out. But this is not something that I'll be talking right now. Yeah, you can clearly see everything. SMT, of course, it will not give anything. So as price does that, continue selling. The process of selling continues until interaction with a valid high time frame POI or a core liquidity level. Same applies in a bullish scenario. Of course, you can clearly see this is a bearish scenario. Yeah, and all of that. So that's the, of course, this is the playbook. You should place everything, like showcase everything where you'll be entering, where you'll be exiting, and also showcasing how you'll be, yeah, setting your TP, like how you'll be validating your entry, where you'll be getting your entry, like all of that is the technical base, and that's the playbook. Pro trend or counter trend, maybe most of you it will be only pro trend because I have not talked about the counter trend. And yeah, I'm still backtesting on the counter trends. Probably when I get to fully understand the counter trend, I will create a playlist on my YouTube channel showcasing or teaching about the counter trend. All right, then there is the emphasis. Of course, these are just trading rules or things that you usually follow up that are based on your system, and the, yeah, things like that, also based on your whatever. Strictly no execution outside the playbook. Yeah, if they do not meet, so let's say I get a trade from the first leg and I usually take starting from the second leg, I will not take that trade even if I see a rejection from the high time from, I mean from the POI. I will not take that trade because it's on the second, I mean the first leg. The second leg protocol is must when confirming possible reversals. According to me, that's a must, but according to to True SMC, even the first leg it's valid for you to take the reversal. Always adhering to the risk and money management plan. I will always follow this. I will never take more than 2 trades in a day. I will never take a risk that is more than 0.5% of my account balance. I will never take a trade that has a risk reward that is less than 1:3. Of course, for the trading assets, I may shift sometimes, but mostly I usually prefer the GBP/USD and USD/JPY. And yeah, if you're using the lower time frame, of course, you don't need to use like many time frames. For those who are using, like for the swing traders who get their entries from the 1 hour, or yeah, the 1 hour, the 4 hour, or maybe the M15, some, yeah, then now you'll have to actually increase your watch list to something like 6 to 10 pairs there. Yeah, and if you are someone who is taking trades on the 1 hour, the 4 hour, maybe you can have more than 10. Yeah, depends actually. Then after that, of course, the playbook performance. You will need to track the playbook, like the performance of the playbook. Of course, we are currently on the third quarter of the 2025 year. Of course, the third and the fourth quarter. You can see this is Q3 2025 and this is Q4 2025. So you can see this is Q3. When I open Q3, you can clearly see that this is where now you will be journaling the trades. This is where you will be inputting the trades. You can see after the Q3 trades, you will now getting to know the total trades taken, the max winning streak, the max losing streak, the win rate of the Q3 trades. Did you got a 40% win rate, a 50%, a 60, 70, or even sometimes 80? The loss rate, was it 40%, 30%, 20%? You'll get to know all of that. The average RR, yeah, maybe you got a 1:8 today, the next day a 1:7, the next day a 1:5, the next day a 1:3. Now when you get the average of those risk to reward, is it giving you a 1:4, a 1:5, a 1:3? Get to know that. And then of course the gross P&L for the Q3 trades. By Q3 I mean July, August, and September. So for the 3 months, like what was the gross P&L? Maybe you got a 30% of your account, like 30%, maybe you got a 20%, even sometimes even 10%. It happens. Yeah, you can have like a bad Q3. Let's say during the trading you got messed up psychology, or maybe you just decided to go on vacation like for a whole month, or maybe you decided to take a break for a whole month and you didn't trade for, let's say, the September, and you only took the trades on the July and August. Yeah, things like that will happen. So they may also affect the data and all of that. But now let me get into the database where now you'll be getting your trading day. So right here on the trading day, maybe tomorrow it's on Friday. So let's say Friday, you input your Friday there. Then for the date, of course, we need to, right, so the date of tomorrow, of course, on Friday, it will be 1st August, right? Then the asset, let's say I took a trade on GBP USD. Is it a long or a short? Let's say I took a long. Yeah, GBP USD selling. Yeah, but yeah, counter trend, I will be taking a long. Then for the session, let's say I got the trade during London. Then RR, let's say I got a 1:3, so I'll just input 3. Right, then for the outcome, let's say it was a winner. Then the P&L, of course, since I'm using 0.5% risk per trade, of course I'll be expecting something near 1 point, I mean 1.5%. So let me change this. It needs to be percent. It should be number, right here. Edit property, default decimal places. This one, it needs to be percent. Yeah. So that now it can be 1.5%. Yeah, that's correct. Right, so then let's say the next day, of course, the same happens. Now, for me to actually take the screenshot and stuff, I will need to open this. You see, open in SidePick. Once you do this, now you can actually journal here now. You can start from the trade outcome, maybe the trade outcome. But let's say after the trade outcome, let's say here down, you'll have something like the M5 analysis, the H1 analysis, the H4 analysis. Then you can also include even the screenshot. So let me showcase how you can actually take the screenshot. So let's say you took a buy, right? So from there all the way, or let's say you just predicted that price will going high, will be going high. Then after that, you can actually take right back to TradingView. You can actually take a screenshot. You can see where I'm getting. You can see after there is published, then this take a snapshot. You can actually download image. Then after downloading image, of course, you'll be getting to Notion. Of course, you will not be uploading it. You'll just be copy pasting it. So you'll be getting onto your file explorer and get to your downloads. You will find it there probably. Then just Control C and then get back to your Notion and Control V. So once you do that, it will just automatically be presented there. Then you can continue journaling. You can say, based on the chart, I have seen that price has taken out the inducement. Then after that, price mitigated the high time frame PY, so I had to shift to the lower time frame. And as you can see from the chart above, price, I was expecting that price should reverse because it has mitigated this, or I should expect prices to reverse because it has created the second leg. So the two-leg protocol is made. Like anything that you can actually include on the journal and everything. And once you have done that, now you just wait for the trade to, yeah, of course, now this is not the trade outcome. This is actually the analysis part. Then now after you have waited and price has now achieved your TP, or maybe achieved to your SL, now you'll be including also the screenshot of your winner or loser there. And you can comment here that it was a valid trade, or let's say you can say that that was a nice trade. Anything that you can comment right there. So those are like, that's how you'll be journaling. That's the reason as to why I love Notion, because it's actually it's all you need. Yeah, Notion is actually all you need for the journaling and everything. Yeah, it's actually the best, if not one of the best. So you can clearly see everything. It's clear, and I'll be sharing you the videos. And probably when you learn there, you can actually get to create for yourself something like this. It's not hard. Yeah, maybe you can create even something more than this. Then after that, you'll be doing the same for the Q4. And of course, after every quarter of the year, maybe you can do it even after every month of the year, because let's say you are taking like many trades for the month. Let's say something more than 20 trades, then you will have to be journaling after every month. I mean, getting this kind of you can see total trades, whatever, these metrics after the end of each month. But for me, I can take like 12 trades in a month. I can take 10 trades, even sometimes 8 trades in a month. So for me, I actually use the whole quarter, because for the whole quarter I will have many trades that I can now put into these metrics and get a more accurate result. Right, so this is how. And by the way, for the trade, I mean, the more your trades, I mean, the more trades you take, doesn't mean that you'll be getting high returns at the end of, yeah, whatever the time. Like, it's not that correlated, that is not directly proportional. That when you take many trades, you'll be getting a good P&L after the end of, no. Like, you can even take like small trades and have good P&L after the end of a certain period, more than the one that is taking like many trades. So if you just restrict yourself to the high probability setups, I know the trade frequency will be low, but at the end it will give you like a good win rate. And I usually like saying this. I know you can be taking a lot of trades, and like, because if you take the good trades, because it'll be like yeah, you can also have a good winner, but it's not guaranteed when you actually, because if you take many trades, this means that you're including the high probability ones and the low probability ones. So this means your win rate is already lowered. But if you only focus with the high probability ones, this means your win rate is, of course, it will increase. You'll have a good win rate. So that means that your psychology also will be very, like, it will not likely be messed up when only taking or only getting, only be this when you only discipline yourself on taking the higher probability setups, your psychology will always be intact. Because when you mess up your psychology, even if your technical is good, like, you're done, like, your account balance is done. And by the way, it only takes 50% drawdown to actually blow your account. In fact, blowing your account is not 100%. Like, when I get to 100%, like, when I lose the whole account, like, not, it's rarely that in fact, when you lose a whole account, this means that you have been taking like bad risk percentages. So if you are taking like the fixed percentages and you are mixing the low probability ones, you don't restrict yourself to whatever. So this means that you're just taking any trade of intuition, you're just taking any trade that aligns with true SMC. You have seen this, you have seen that. You don't even have a time frame selection that you're taking. Like, you're just taking any trade that aligns with true SMC. Like, there is this PY, there is this SMT, probably price will be going higher. Like, anything that aligns with true SMC, you're just taking. This means that you will have a low win rate, and also this means that you'll be getting more stop loss, especially if you're using the lower time frames. And this means that even if you're using a fixed percent, let's say you're using 0.5% per trade, you will end up, like, you get time when the stop outs are too many, that will end up increasing your percentages so that you can actually recover back the losses or get yourself out of that drawdown. And that's when now your psychology is like, that's when you lose your discipline, and also you mess up your psychology, and you get into some drawdown, let's say 5%, you increase your risk so that you can get on out of that 5%, then more again 10%, 20%, because you're actually taking like wrong decisions of the market. You're actually taking any trade that seems correct of true SMC. I know you have learned true SMC that good that you can now spot like price will now be buying, but you actually don't, like, you don't even know where. Yeah, you can actually predict the direction that price is buying, but your entry will not be correct. So in that case now, of course, the reason as to why your entry will not be correct is because you'll also be looking forward for those high risk rewards. So this means that you'll be placing trades like without even making good decisions. You'll be placing your Excel in somewhere that is not supposed to be set there. You will not be waiting for price to react. You'll just be predicting that price will be mitigating this zone and make a reversal. Believe me, sometimes even the extreme PY can fail. So in that case, that I don't even know how I'll explain this, but actually take this seriously. Just only focus on the high probability setups. Only restrict yourself to the trades that you have included on your pro trend playbook, because I will not take any trade that is off my playbook, and that keeps me in a way that even if I get into a drawdown, I am disciplined in such a way that I will not take any trade that is not aligned with the playbook. So in that case, I'm still executing based on my playbook. I'm still placing my sale where it should be. I'm still placing my TP where it should be. And I'm still glued on the system. This means that in time or in due time, I'll get off of that drawdown because the system is proven to work. The system is profitable. And a profitable system will always get you in, will always get you out of the drawdown. So even after a losing streak, continue risking the same percent. Don't lower your risk. I know you may be like, since I'm in a losing streak, I will lower your risk. That's even worse when you actually increase your risk. When you increase your risk, that's worse. Even lowering, it's not that bad. You can lower because of your psychology and all of that, but I really don't recommend it. If you are meant to actually lose that trade, accept that the system is actually losing your account. Like, just accept it will get you into some kind of drawdown, but eventually it will get you out of that drawdown. And then after that, now check it out, like, why did the system did this? Like, why was I getting like such insane drawdowns of this period, and see where we was going wrong, if it was the analysis, or maybe you took something that is of the system but it was looking similar it and all of that. So that's actually, you need to have something like this. You need to restrict yourself. I know you have everything in your mind. I know you're like, I know that once I've mitigated the hard time from PY, I'll go this and this. Yes, I know all of that, but just write it down. Yeah, somewhere, just write it down. Everything that you'll be following, write it down and follow that. Like, by following that, I mean rigorously without deviating from it, and journal each trade you take based off that playbook that you actually, like, journal each trade taken and don't deviate from that journal. And also, don't get attached to an individual outcome. By individual outcome, I mean today you'll be getting a loss. Let that loss not get into your heart in such a way that you'll be looking forward to recover from it. No, even if in a losing streak, don't get like glued on that losing streak. Just know that it's part of the system. The system will experience losses and wins because we don't know how the sequence of the wins and losses will present. The sequence of our wins and losses of our system is actually random. Our system, of course, we don't expect a system that will have like I don't even think if there's a system that has 100% win rate. This means that if you have a system that is having 70% win rate, this means in a range of 10 trades, you will be having 7 wins and 3 losses. You actually don't know how those losses will be presented. Now let's take in a series of 100 trades and you're having 70% win rate. That means that you will be having 70 wins approximately and 30% losses. So I mean, those 30 losers, you don't even know like how the losers will present. Maybe you'll be having 5 wins in a row and then have like 10 losses. That's not realistic. Let's say 5 wins, 5 losses. So you can see the 5 because you don't, it can be win, 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 loss, loss, loss. Or maybe it can be loss, loss, win, 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 loss, 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 win, 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 win. And then after that, price may just, we don't know that sequence. So why get attached to that single drawdown, that single losing streak, that single loss? Just check it out over a big data set, like a big range of trades, and you will find out that you're actually getting out of the drawdown, increasing about this, getting again into a drawdown, then getting higher, and in a long run, you will find yourself that you have acquired some good some profits and all of that. So yeah, today it was just about the strategy psychology and risk management. I've talked about risk management. Of course, I'm expecting that all of you, not all of you, but I will also send the video on how to calculate your risk. I mean, the lot says as per your risk tolerance. Yeah, so that you can know like how will you like what lot size will you be using if you will only be risking 0.5% into a trade. Yeah, I'll be sending that in case you don't know how to, but I'm expecting like you should be knowing this because it's very, very important. Your risk plays a big role in your trading. Yeah, having a good risk system, having a good risk money management plan plays a very crucial part. And also, always do the things that will keep your psychology intact. Anything that can mess up with your psychology, it has messed up your trading account. Just know that your trading account is already at risk when your psychology is messed up. So ensure that all the rules that you're setting, ensure that all the trades that you're taking, ensure that the moves, the decisions that you're taking, they will end up getting your psychology intact. They will not mess up with your psychology, because if you mess up with your psychology, you have messed up with your capital. And we all know what happens after that. And I said a drawdown, it doesn't mean like 100% losing. You can have a 20% drawdown, and that 20% drawdown will mess up your psychology and you may end up blowing that account, because any decision that you'll be making of after that 20%, 25% drawdown is actually not a right decision. You'll be making wrong decision. Even if they may seem right to you at the moment, they're not right. You will end up be making wrong decisions. You will end up be increasing your risk. You may end up be taking trades that are not on your playbook, and that's when you start failing. That's when you know that you're actually blowing the account. But you'll never know that until you have actually blown your account, and that's when now you'll get back and say like, why was I taking this right decision? Why was I taking these wrong decisions? So do anything that will make your psychology intact, and make sure that your risk and money management plan is intact. Create something like this. It's very, very crucial. Journal each trade you take, and ensure that you lower the number of trades that you take. Like I said, the number of trades that you take, they don't like increase the, like they do not affect, they do not like they are not directly proportional with the outcome after a certain period of time. You can have less trades and have a good P&L. You can have more trades and have a bad P&L. So take a look at that. And yeah, I think this will give you a good start. And yeah, I'm wishing you all guys all the best.